This is the World Financial Podcast with Harold Siegel. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping our show on Thursday, November 30th, and our time is 8:18 Mountain. It's been another crazy week. Bitcoin soared to new heights, surpassing 11,000 before plummeting 20% in a matter of hours. The FANG stocks, we're talking about Facebook, we're talking about Amazon, Netflix, Google, experienced on Wednesday a $60 billion wipeout, a record amount of lost value. And we had more people shown the door. Media personalities Matt Lauer and Garrison Keillor were fired over alleged misconduct. And it was interesting to note, I saw this picture on Twitter. Pop star Katy Perry was discussing cryptocurrencies with Warren Buffett. And if you want to know if something probably is at a mania, that would be a very good sign that you have Katy Perry talking to Warren Buffett about cryptocurrencies. There was a quote this week from Bloomberg. It's in our free weekly newsletter. He says, and this is Joseph Stiglitz, an economist, so it seems to me it ought to be outlawed. He said that in an interview with Tom Keene. It doesn't serve any socially useful function. That according to the interview with Joseph Stiglitz with Tom Keene on Bloomberg. Now let's take a look at the U.S. dollar. U.S. dollar 93.05 as we start. Canadian dollar 77.79. Gold at 12.85. Silver 16.65. Gold-silver ratio was right around 75. It's up to 78.16 right now. Platinum 950. Palladium 1,024. WTI 57.77. Brent is at $64. Bitcoin in Canadian dollars, we're looking at 12,175, and in U.S. dollars, $9,464.99. So it really has pulled back after that major run-up over the past week. We'll talk about it later in the show, but the Pink Promise, Pink Diamond sold for $32 million, and big news, it finally happened. Prince Harry, of course, heir to the throne at some point, not directly in line. That will go to William, but he is actually going to be engaged to an American, a divorced American, Meghan Markle, and we'll talk about her engagement ring. Also, North Korea, they fired off another missile, and that upset Donald Trump to the extreme. Now, this morning, as we are doing our show, we have news that has come out, and this is in relation to OPEC meeting. Oil, they actually went ahead, OPEC, and they are continuing the production cuts. They have a meeting underway in Vienna, and they want to keep the production cuts in place. Compliance so far has been fantastic, and they plan on doing this well into 2018. So, Harold, they're really trying to control the oil market, OPEC.
Well, I've traded oil for over 35 years, and they do control the price. They do control it on the upside and on the downside. Now, oil is still trading in a range, but it's in the higher end of the range. It's trading at 57.54, up 34 cents today. You know, the thing is that these OPEC members get so greedy at times that they start to cheat, and then, you know, the production hits the market, and then the market falls, and you know, it's trading in a range at this point. Obviously, with oil trading at 57.54 right now, it spent most of last year trading right at around $50. So we've seen about a $7 or $8 increase in the price of oil. Again, if OPEC starts to cheat like it has a history of doing, there's no doubt that the market is going to pull back. There is still a huge oversupply of oil on the market. That's why the market's at this level. You know, we're talking quite a bit about Bitcoin because, you know, it's a bubble. It's a cryptocurrency that most people don't understand. But I read a joke the other day. It was about a guy that walks into a bar and is, you know, talking to a girl, and he's bragging that he's got over $1 million in Bitcoins. So she says, well, then you can afford to buy me a drink. He says, oh, I don't have any real money. So most people don't really understand Bitcoin or these cryptocurrencies. Uh, Personally, I don't trade in them. They're way too volatile at this time. We did took a look at them as a potential investment for our clients, but again, the volatility in that market is just something that we're not overly comfortable. This week, the markets were actually fairly active. The beginning of the week in gold, the market was up substantially, and we went all the way up to 1,300. There's some support at the 1,300 or resistance at the 1,300 level. The real important number for gold is 1,380. We'd have to see two closes in a row above 1,380 for gold really to break out. Even with everything that happened in North Korea this week, with them firing a missile that they say could basically hit anywhere in the United States, oil did rally at the beginning of the week, went to 1,300. Now it's back down to 1,281. So again, the market is still trading within a range. We had a couple strong days in a row in gold, but then again, the week before we saw a similar trading action where the market was up strong for a few days, then backed off again at the end of the week. There's two major things that can move the price of gold. One of them is the US dollar. So if the US dollar did start to fall substantially, there is a direct correlation between the US dollar and gold. When the US dollar is strong, gold is a weak commodity. And the opposite is true. When the dollar is weak, gold is strong. At this point here, we're bullish on the US dollar. We think that the US dollar will break par and eventually get substantially higher unless Trump does something ridiculous. Now, the other situation would be a geopolitical situation that could move the price of gold. We saw it at the beginning of the week when there was some saber rattling over what North Korea was doing. But again, we're bringing sanctions against them, and you know that eventually the sanctions are going to do their job. And again, this should curtail all the rhetoric and everything that's going on there. Silver still trading in a range, is down 11 cents today at 16.49. And palladium, and this is the real shocker, except that it was a market that we recommended, years ago. But platinum, which has always been the most expensive metal, is actually below the price of gold and below the price of palladium. Palladium is at $1,014, and platinum's only at $949. So the relationship to the catalytic converter industry has actually changed, because platinum and palladium were both used in catalytic converters. But platinum was at $1,100, $1,200, $1,300, $1,400 an ounce, and palladium was down at one time $180 an ounce. When they discovered that you could use palladium for the same thing as platinum, the price of palladium started to move on the upside. And we've seen palladium go from $180 to over $1,000. It's actually one of the strongest metals, in fact, the strongest metal at this particular time. So, again, at this time, most of the markets are still trading in a range. I buy gold and hold on to gold just in case certain situations happen, as a hedge against the dollar falling, as a hedge against a geopolitical situation like North Korea, or just an overall substantial situation in the economy here in the United States. With the derivatives market, that would definitely react, and gold would react strongly to that. But again, at this point, the U.S. stock market seems to be the best game in town. Not that we participate in it. I think it's extremely high at this point. President Trump is taking all the credit for the market moving, but the market was moving long before he got in. He has actually done very little to help the economy in the United States at this point. So, again, Randy, my top recommendation is still the U.S. dollar on the upside. I believe that's where the money's going to be made over the short and intermediate term. But we are monitoring gold very closely, again, with what's happening in North Korea. And I highly doubt that we will see a drop in the U.S. dollar. I do see that as the strong currency moving forward.
Connect with Harold at 1-800-432-1022. We have our podcast. It's on his websites, rarecoloreddiamonds.com, also HESradio.com, and we have it through iTunes as well. Now, if you would like to be a part of the radio program on a weekly basis, subscribe to the podcast. it will automatically come in for you. Get our free weekly newsletter. It's the companion to the radio program, the podcast, 1-800-432-1022. Learn more about investing in hard assets. Speak with Harold. Also, speak to him about getting our free weekly newsletter, 1-800-432-1022. Now, it's interesting to note that this week, and we have this in our newsletter, the head of the Federal Housing Agency in Canada says more Canadians may have to rethink the idea of owning a home. Now, isn't that stunning? Especially in major cities where prices have surged. The dream of home ownership may be fading for some, according to Evan Siddall, president of the Canadian Mortgage and Housing Corporation. He actually gave a speech at a conference in Australia. Australia, similar to Sweden, and Canada, are in bubble territory in some markets like Toronto and Vancouver. We've spoken about that before on the podcast. Housing affordability has become a serious problem in our major cities. The remarks come the week after Prime Minister Justin Trudeau introduced a $40 billion, and this is Canadian, worth of spending over the next decade to fix up public housing projects and offer new rental subsidies to poorer families. Now, prices in Vancouver and Toronto have surged, and traditional single-family homes can often fetch more than $1 million. I know of someone who paid $600,000 for a home. Over 10 years later, that home is worth 1.6 to 1.8 million, depending, and this is in the Vancouver area, depending on how it is assessed and who does the assessing, but just a massive number, 600,000 to over 1 million. And that's prompting buyers to move into distant suburbs and lawmakers to introduce special taxes on foreign owners. High prices are likely behind a decline in the Canadian home ownership rates, which have also fallen into other industrialized nations. Now, Canada remains vulnerable to household debts that have reached 175% of disposable income. Toronto home prices have climbed 63% over the past 5 years, with about half of the gain coming in the last 2 years, according to the Terranet National Bank Home Price Index. In Vancouver, prices have jumped 65% over 5 years. Now, another warning for Canada, Harold. Canadian households lead the world in terms of debt, according to the OECD. Housing prices at least 50% overvalued compared to what they could rent for, the group says. And this is in a brand new report that's coming out and has been released early. But we're looking at Canada and Scandinavian countries where the household debt, according to the OECD, has continued to rise from very high levels. And that's a challenge for Canadians going forward. How do you afford a home? And on top of it, how do you get your debt under control? Harold, it's a very interesting time here in Canada.
It certainly is, Randy. And again, this is why I'm shaking my head why the Canadian government is raising interest rates. I mean, judging by what you just said, the worst thing that they could possibly do is raise interest rates. If the household debt is the highest that it's been, yeah, let's raise interest rates to make it more expensive to carry that debt. And then for those that could possibly afford to buy a home, yeah, let's raise the interest rate so the mortgage rate is higher so people can't afford to buy the homes. I'm shaking my head at that because I don't understand the philosophy of doing this. Why in the world would you raise interest rates at a time where there's such low inflation? And in all honesty, the Canadian government wants a cheaper dollar because it makes Canadian exports that much more affordable. So again, when they raised the interest rates, when we started talking about it, 5 or 6 months back, we were both shaking our heads saying this is so counterproductive to stimulating the Canadian economy. It makes absolutely no sense. And judging by what you said just now, it makes even less sense that they've been doing that.
And one of the things to keep in mind, they say in this story, research points to a number of links between high indebtedness and the risks of severe recessions. And they say increasing to higher than normal housing price, which was witnessed in just before each of the four major worldwide recessions dating back to the 70s, is another thing to watch out for, and that's happening here in Canada. And all across OECD nations, average house prices are already higher in relation to GDP than they were before the slowdowns in the 70s, 80s, 90s, and early 2000s. According to the latest numbers from the Canadian Real Estate Association, homes in Canada, the average price $506,000, up 5%. Now, that's something that people should be aware of. And if you're wondering what you do in a situation like that, maybe you have high debt, maybe you're looking to buy a home, maybe you're in a home, that's why Harold Siegel is there. We believe in investing in hard assets. And Harold has been through a lot of ups and downs in markets, and if you would like to pick his brain, he'll be happy to take your call at 1-800-432-1022. And obviously, we'll happy to get you the free weekly newsletter as well. Now, people are concerned about the stock market. Goldman Sachs coming out this week warning highest valuations since 1900 means pain is coming. A prolonged bull market across stocks, bonds, and credit has left a measure of average valuation at the highest since 1900, a condition that at some point is going to translate into pain for investors, according to Goldman Sachs. It has seldom been the case that equities, bonds, and credit have been similarly expensive at the same time, only in the roaring 20s and golden 50s, according to Goldman Sachs. All good things must come to an end. There will be a bear market eventually, they said, as central banks cut back their quantitative easing, pushing up the premiums investors demand to hold longer-dated bonds. Returns are likely to be lower across all assets over the medium term, and they say a second, less likely scenario would involve fast pain. And we're talking about stock and bond market valuations. They would get hit and hit hard, with the mix depending on whether the trigger involved a negative growth shock or a growth shock alongside an inflation pickup. And they say elevated valuations increase the risk of drawdowns for the simple reason there is less buffer to absorb the shocks. Now, the average valuation percentile across equities, bonds, and credit in the United States is 90%, an all-time high, and a portfolio of 60% S&P 500 stocks and 40% 10-year U.S. Treasuries generated 7.1% inflation-adjusted return since 1985. Goldman calculates that that will probably be about 4.8%. And they say that the tech bubble implosion and global financial crisis were the two taints in the record, and that was over the last century that you saw Goldman calculate and compare with a 4.8% over the last century compared to 7.1% since 85. But Harold, another company has come out too, and the chance of a U.S. stock market correction is now at 70% according to the Vanguard Group. So we're in a situation right now, and there is an article that's quite interesting. I would encourage people to read it in our free weekly newsletter, What to Worry About in This Surreal Bull Market. We're almost 10 years out of the financial crisis, and they talk about a number of things being catalysts for a major pullback in the stock market, and it's something that we all need to be aware of, Harold.
Oh, yes. Now, the thing is about that is that the general public is the one that always ends up getting hurt. The guys on Wall Street know when this is coming, basically put stops in or protect themselves with puts or whichever way they're going to do it. You see, it's very difficult to liquidate an entire stock portfolio because there's tax repercussions. So the fact is that when the market gets like it is now, very much overvalued, people starting to get nervous, it's very difficult to do anything about it. Because again, if you pull all your stocks at this particular point, most people think that they're missing out on something, so they don't want to be out of the market. What happens if it doesn't pull back and I'm out? Then I got to pay my taxes and the whole thing's on it. So, pulling out of the market is not easy. People are not sophisticated enough to understand how to hedge, meaning that if you're heavily into the S&P 500s, you can buy a futures contract short or buy puts. Most people don't understand how to do that. So what happens is that they go along with their financial advisor. Financial advisor tells them, listen, the market's always correct. The market's going to fall, then it's going to come all the way back. And that's unfortunately what people will end up going through. Look what happened in 2008 when the market dropped from 14,000 to 6,500. Yeah, it took a long time for that market to come back. But the fact is that a lot of people got wiped out during that fall because they wouldn't sell out of their position. Now, some people held on to their stocks even though many of them were down 80%, 70% type of thing. And eventually the market did come back. But most people do panic when that does happen, sell out and end up taking losses because the general public is unsophisticated when it comes to a panic situation in a marketplace. And I've seen that happen many times. Myself, if I was in that position, I would actually hedge by buying puts or short the market. But again, most people aren't comfortable doing that type of thing, and they end up just not doing anything, just sitting in the market, watching the market fall, dealing with the stress, and hoping that the market will eventually come back again.
As we said earlier, if you do have any questions whatsoever about the financial markets, Harold Siegel is our expert in the financial markets and diamonds. You can speak with him personally and privately at 1-800-432-1022. He'll be happy to answer any questions you have, and you can learn more about investing in hard assets. One of the things that happened this week, Christie's Hong Kong Magnificent Jewels Sale and the Pink Promise. November 28, 2017, Hong Kong, China. We have the auction results in our free weekly newsletter. A rare 14.93 carat pink diamond, the Pink Promise, sold for $32 million. And that was at the Magnificent Jewels Hong Kong auction. It saw some pretty impressive results for fancy colored diamonds and for rubies, but the real headliner was the hammer price for the incredible 14.93 carat fancy vivid VVS1 pink diamond. The diamond, described by Christie's as the Picasso of the pink diamond world, sold for an incredible $32 million, approximately $2.13 million per carat. The diamond, referred to as the Pink Promise diamond, is a stunning pink oval stone with mixed cuts. Its fancy vivid pink color, as opposed to fancy intense pink, is a designation given by the GIA and represents the most prized color grading in pink diamond history. And there's a bit of an interesting backstory on this. The oval stone was set in platinum ring and surrounded by diamonds. It was estimated that the ring would sell for 28 to 42 million. The fancy pink diamonds was originally purchased by gemologist and jeweler Stephen Silver, who is known for his keen eye for gemstones. When he bought the stone for an undisclosed amount in 2013, it was originally 16.21 carats, fancy intense pink. However, Silver believed that the stone could achieve a higher color rating if it were cut differently to allow more light through it. Silver turned to a master gem cutter, and together they spent several years planning how to cut the rare type 2A pink diamond. Diamonds are categorized into two main types, 1 and 2, depending on the nitrogen present in its structure. Now, type 2 diamonds are divided further into A or B, meaning they contain very little nitrogen, with 2A being the purest. Cutting the 16.21 carat stone was risky because if they could not achieve a higher color rating, they were basically tossing away millions of dollars in lost carat weight. the risk paid off. The stone was recertified by the GIA after cutting from 16 to 14.93. It went from fancy intense to a much rarer fancy vivid pink rating. Additionally, the Type 2A pink diamond achieved the VVS1 clarity, the grade just beneath flawless. Now, the higher grades in color and clarity boosted the value of the diamond exponentially. According to the GIA, only 1 in every 1,000 diamonds mined can be classified as fancy colored diamonds. So this stone, fancy vivid, the highest color mark, and its large size, which is very rare for pinks. The remarkable remake of the diamond from Stephen Silver promised that it would be brighter and more intense, yielding the name the Pink Promise. And Harold, this diamond went on to do very, very well at auction this week in Hong Kong.
You know, that is such an amazing story, and actually shocking that he had the guts to recut that diamond. Now, we have recut diamonds. For example, fancy deep pink diamonds, we've had success the very, very odd time of cutting them into reds. So what they did with the Pink Promise, they had a 16 karat intense, and they felt that if they cut about 1.5 carats off the diamond, that they would get a vivid grading. And that's a huge big deal, because vivid is the highest saturation of color, and they tend to sell for much more than any other color. So we've noticed it with blues also. The vivid blues have made the biggest price move over the last 10 or 15 years. So again, I take my hat off to them, because that was a very, very risky move to cut it from 16 and change down to a 14 to get a vivid grading from GIA. That diamond actually would have sold for way more if it would have turned out to be flawless instead of VVS, but still an unbelievable story. Take my hat off to him for having the guts to do that, because again, you're talking that if they would have, hurt the diamond, you're talking about a diamond now that sold for 32 million, could have been worthless almost. So my hat's off to them. Kudos, great job.
Well, it definitely was a gamble, but a gamble that was calculated, and the Pink Promise has become now a legendary diamond going forward based on all the things that we just talked about. You can see our free weekly newsletter and get it from Harold. We'll be happy to send it out to you, and take a look at the auction results. We have some great auction results from the Hong Kong sale for colored diamonds. Connect with Harold at 1-800-432-1022. Now, one of the other things that we wanted to touch on, all the details, and this was a big event. They thought it may happen on the weekend, last weekend, but it happened the beginning of the week. All the details of Meghan Markle's engagement ring from Prince Harry. Prince Harry proposed to Meghan Markle with a custom engaged ring, and he designed for his bride-to-be. It features a trio of stunning diamonds. The ring's center stone hails from Botswana, a country with personal significance for the couple, and is flanked by 2 diamonds from the personal collection of Harry's mother, the late Princess Diana. The little diamonds on either side are from my mother's jewelry collection to make sure she's with us on this crazy journey together, Harry told the BBC's Michel Hussein. They had an interview. I saw one on CNN as well. Markle, who called the ring beautiful and incredible, was touched by Harry's design choices, especially the ring's link to his mother. I think everything about Harry's thoughtfulness and the inclusion of Diana stones, and obviously not being able to meet his mom, is so important to me to know that she's a part of this with us. And it's incredibly special to be able to have this with the sort of links where Harry comes from and Botswana, which is important to us. It's perfect. The stone sits on a band of yellow gold, Markle's favorite, and Harry said he actually was making it together with the Queen's jeweler, Cleve & Co., and they obviously are very happily engaged. and we're very happy for them. One of the things that Harry said while describing the ring is that it's very, very beautiful, and make sure it stays on that finger. And Harold, I would imagine it's probably worth, when you factor in everything associated with it, there were some people that were saying maybe $350,000, maybe even up to $500,000, something like that.
Wow. Hard to put a price on that type of thing, especially diamonds coming from his mom, Diana. It's amazing how the British monarchy has changed and how accepting they have become over the last decade or so. I would have thought that, marrying an American, and I believe she was divorced
That's
before,
right.
wasn't she?
That's true.
So I was amazed at that, but I'm happy to see that it's progressing in that fashion, and that the Queen and the monarchy is that accepting and willing to change. So I think that's very commendable, and it's a great story.
We wish them nothing but the best. And she's in a television series called Suits. And if you want to watch a great series about the monarchy, it's called The Crown. It's on Netflix as well. And the second season coming out December the 8th. The first season is on Netflix right now. And it talked about how the Queen took over from her father, and they've done a complete dramatization of it, 1-hour TV shows. And I can't remember how many there are. I think there's like 12 or 13 for the first year. But it is very, very well done for those that follow the monarchy. One of the best quotes we've had in a long time, and I wanted to mention this as we're towards the end of today's podcast. This is from Jean Gica, and Bonham's director of jewelry in the UK and Europe. As with all passion-driven investments, and we're talking about diamonds here, the returns for buyers of fine jewelry go well beyond any increases in monetary value. Most jewels are given as tokens of affection or as mementos of important events. The primary reason someone purchases a piece is because they want to wear it. They love it, and it becomes a part of their style. The investment value is a sidebar. All the same, most of us would likely agree that a stone seems to shine brighter when we know it's increasing in value. And Harold, I saw that quote. It was a part of an article that we have in our free weekly newsletter, Why Diamonds Are Gems Are Catching the Eye of Serious Investors. And it was put together, and we have it in our free weekly newsletter. But what an outstanding quote. Don't you agree?
I certainly do. And, one thing is that when an investor, and recently, when we've been giving auction results, we've been, talking about unbelievable diamonds. Today, you're talking a $32 million diamond. Now, obviously, most people could never afford a diamond like that. But if an investor is going to spend $32 million, he's not doing it just because it's a beautiful diamond. It's because it's a great investment. And, where diamonds are a long-term investment, if you look at the Pink Promise from when it was purchased till recent, you're only talking a short period of time. So it appears at this point here that when you get the right type of diamond and the right type of marketplace, and again, right now we're concerned about a potential, massive drop in stocks or things that could happen to the economy. But these type of assets, hard assets like diamonds and art and those type of assets, don't react in a negative way to financial markets that fall. So that's one of the major reasons why I've always recommended rare colored diamonds to my clients as a long-term investment, because they're not affected by the stock market and outside markets like that. It's a totally different investment.
Speak with Harold about investing in hard assets. His website, rarecoloreddiamonds.com, rarecoloreddiamonds.com. He has an auction site, hsfineauctions.com. An auction is underway right now. Go there and sign up, be a part of the bidding. But speak with Harold personally and privately, 1-800-432-1022. And we'll finish today's podcast off on some sporting notes. Congratulations to Harold's Toronto Argonauts. They defeated the Calgary Stampeders. Oh, wow, what a game it was. They were down, and Toronto came back. Ricky Ray, 4 Grey Cups now, 2 with Edmonton, the Eskimos, and 2 with the Argonauts, one of the greatest quarterbacks of all time. 27-24, Toronto winning the Grey Cup over Calgary. And with all the success Calgary's had in football, they just have not been able to win the big game when it counts. And it's maddening to their fans. Also, tonight, as we tape the program on Thursday, November 30th, don't worry, Harold and I will still be friends after tonight. Toronto Maple Leafs in Edmonton to play the Edmonton Oilers, so it's going to be a good game. Connor McDavid and Austin Matthews, 2 of the greatest players on the planet, are playing, and Harold, it should be one heck of a game.
You better believe it. Believe me, I am all about Canada, so I just want a Canadian team to win. I'm from Toronto originally, and we haven't won since the 60s, so again, my heart is there, but believe me, I'm a Canadian fan, and I'm a Canadian hockey fan, and I would just be happy to see a Canadian team win the Stanley Cup again. It's getting exciting again with Connor McDavid and with Austin Matthews. It's really getting exciting to be into hockey again.
Who knows? Maybe down the road, Oilers and Toronto in the Stanley Cup final. That sounds pretty good to me. And we finish with Tiger Woods. And I saw Tiger, he's part of a golf tournament, and I believe that it's his own golf tournament. And Harold knows more. He is a huge Tiger Woods fan. And Tiger Woods back golfing, and he was saying that he's never felt so good. So, Harold, I'm a big Tiger Woods fan too, and I'm really hoping that he's back and that he can really make a run over the next couple of years to finish off his career in grand style.
I would love to see that too. I think he's been phenomenal for the game of golf, and it's great to see him coming back. And so far what I'm seeing, he's playing well. His back is not hurting, and that's going to be great for the fans. So we wish him all the best. And again, enjoy doing the show today, Randy. I wish everybody a wonderful weekend and a very profitable day.
Thank you very much, Harold. And I should mention that, yes, it was Black Friday in the United States last Friday, and Tiger Woods and Dustin Johnson, they went golfing with Donald Trump. So there you go. Donald Trump doing a little golfing with Tiger Woods. That's it. Another edition of the World Financial Report podcast. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, or call 1-800-432-1022. Get our free weekly newsletter from Harold, the companion to our podcast. You can see all the stories that we're talking about. That's it, our podcast for another week, and we will talk to you next week.